Sean is back to give you a quick report on Bitcoin and MicroStrategy. What is it that we see? What do we think will happen? This is Bitcoin on the 8-hour chart. We ran up and hit a high point of about 74,000 feet. Then write down the trend. In the end, trends will help you. After that, things have mostly been going down since then. Take this white line away, that's clear to see. From this high point, we went down and made a low, the first low being around $60,000. You should know about and pay attention to the $60,000.382 level now that we've seen it. This is a level of intersection that we need to pay attention to, so we'll just cross it off our chart. Since this $73,000 to $74,000 high, it went down, hit $60,000, went back up, and then set a lower high. After that, we went back down and it went through that, but we held that $60,000 level and had a small bounce up, a rejection, and a lower low. Put in a high, a low, a lower high, and then a lower low. This shows that the trend has changed. After that, we went back up. You can see that even this wick up here had a lower high than the last wick based on convergence. After that, we went back down and we may have hit rock bottom right here near $54,000. That's what we thought anyway. After going down, we went back up and set a new low around $70,000 again. A lot of people thought this was going to be the bottom of this. That was just a fake out. Then we did everything we could to bring the low end down to 49,000. As you can see, it was a short wave. We went down and then back up. But look at this, we still set a lower high. To sum up, the trend will help you until the end. Notice that when we went back down, we didn't go below the previous low, which was $49,000. This is where things change. This is where we stopped. We were down to about 52, 53, 3,000 on the wick. Oh, look at that. This is now a possible split. You can see that the trend may be shifting. It was important to remember that we got back above the previous high, even if it was only for a short time. After going back up to that level of about $66,000, we set a new low. So it will be interesting to see how things go over the next few weeks and months, since this is now the trend. Right now we were in this downwards channel. This is what the channel would look like if we drew it out for you. Let's get another line and pull this down. That's about it for this one with outliers and a wick down. That's kind of how this channel has been moving for the past 6 months. What if we see a different line of trend? It looks like another channel is beginning to form. How long will this one last? Can it last as long as the one that has been going down for the past 6 months? Let's say one more line. Here's a copy of it. This is not like the other charts or the intersection. This is how we'll keep things the same. If we do see something similar, let's say in 2025, that's a possibility, not a promise, because this is a huge red flag. And this brings you to the 6-figure price goal. We've already talked about that in other videos, so I'm not going to do it again now. Which level do you want to pay attention to if we do go back down? It's possible that we'll go back down to the $54,000 to $56,000 level, maybe with a wick going down to 54. Then there will be a flush of longs and the price will continue to rise, setting a new higher high. It's possible that this trend will change. Note to see these moving averages better, let's get rid of all the red lines. What you should see are the red, green, and blue lines. The chart shows something important. We're only going to look at how prices have changed since August. When it looks like the trend has changed, put in a high and a higher low. In the end, this could be a second leg. What do I mean? Taking a look at our Elliott wave signals. This is the first wave. We have seen the slowdown of wave 2, and this could be wave 3. And everyone knows that wave 3 will be the strongest of all of them. Let's change the size of this so it makes sense and take a closer look. So if wave 3 has a big rise to the upside, this could go up to around $80,000 or $90,000. We can only guess because no one knows for sure. After that, wave 4 will go down and wave 5 will blow off the top, which could take us up to $100,000. That's all there is to it. But when you look at it this way, it does make sense, since the microwave is inside each wave. That's wave 1. This could be a way to go back and we could be about to blast through. After that, we'll have this third leg to map off of the top of this third leg. Are we going to see this? Time will tell. But here's something to keep in mind over the last 6 months. If you look at this channel, this red moving average, that's the 200 moving average, has been very important. The 200 doesn't move very quickly, but it does act as support and resistance. And look what just happened. From the beginning, we used this as our base. A lot of wick downs, and now we're beginning to stair step our way up. Are we now out of the depths? Not yet. We might see a lower low because this leg could also go lower as long as it doesn't break the structure by going lower than this first leg down here. If we look at our horizontals, we can see that this is the base. If the next wave goes down and invalidates this, we'll have more problems in the future. Don't expect prices to go down right now. We could go down to 55 and have a deep leg, that's a given. That's definitely a possibility, and that would fit with the idea of an ABC fix. If we hit the 50 and 20-day moving averages, we might go up. Then, as an ABC correction, we'll go back down before we start the third leg. There are a lot of possible outcomes, but for now, we are keeping support at 200. The 200 level is important to keep an eye on because, as we said, it is a very strong level of resistance or support in this case. What do we see when we look back at the last 6 months and see that we got back above 200? We tried it and saw it through to the end. It has never really held up. It was backed up here. Back in June of this year, however, we saw that the 5th or 20 went over the 50 and then it waited for the price to catch up. Once the price did, following the 20s crossing over the 200, it was at that point that we finally lost it all and fell to the floor. We do need to wait though. It's important to watch the price movement and see what it tells us. This level can help us do that. Right now, if we look at the charts to see what else we can see this was the first run up, we reached 74,000. We're not going to look over here because all of the signs showed that we were way too high. So even here, if we look at a few signs, we can see that the RSI was in an overbought area, but this difference in the RSI showed that it wasn't. It looks like both the RSI and the price made new highs and lows. This is a negative divergence, which means that prices will go back down and start over. It's likely the only level where we had this 200 level hold for so long. Let us check the charts to see if they are aligned right now. As you can see from the RSI, we don't see that same divergence when it comes to putting in. Usually when you see a lower high and a higher high in the price action,